Yes, we are live.
We're live and kicking.
Yeah. You can now share the link. We don't have any member on now. So hello guys, how's everyone doing? As we are waiting for the other members to join, I want to introduce you once again to our trading challenge. We are trying to grow a $100 account to $2,000 trading manually. So we have so far covered 2 backtesting sessions, and this is episode 3 of our backtesting session. We started last week. We were supposed to backtest every day, but we've had some holidays over this week. But now let's resume the consistency. In today's episode, I want to first give you a short lesson or about trading psychology and how we are going to grow this account, because trading is like 80% psychology and 20% technical. So we are first gonna cover the psychological part, and later along we dive into the technicals, which is backtesting our system EURUSD. So first here I have a presentation to you. We are trying to grow $100 to 2,000. This is the psychology nobody is going to talk about. We focus with focus, discipline, and consistency. We will win, and we are going to eventually reach our goals. So we have a community of over 15,000 people. If you really want to join our community, just click in the link in this description and you're going to join. We have WhatsApp and Telegram. So there's a lot in the community. We do give you guys trading advice, tips, what you need to do for you to consistently and for you to consistently make money out of the market. So we are going to basically teach you on how to become a profitable trader. So this is the FXAU $100 challenge. We are going to be trading EURUSD, and we are growing this account from $100 to 2,000 using structure, discipline, and trading psychology. First, we are live backtesting every day on YouTube. I'm backtesting with you the system we are going to use, and we are using FXReplay as the software to backtest. So slide 2 says why 90% of traders never cross the $500 mark. So like always, people have tried to grow $100 to any amount and they have failed. Why? This is why they do fail. So at FXAU, we've coached thousands of traders, and the strategy is rarely the problem. Here is what actually kills accounts. The first thing is revenge trading after a loss. Let's be honest, each and every one of you has ever done revenge trading, because this is common in so many traders, especially the beginner traders. So one losing trade is gonna trigger an emotion, and that emotion is going to trigger 3 more unplanned trades. The account bleeds out in one session, and so we see this in the community. Actually, we see this in the community. A lot of traders blow accounts and they're like, I couldn't accept this loss, and this resulted into blowing my account. And you know, the market conditions currently are harsh, so you guys need to really first study the psychological part of trading before you dive into it. That's why I'm starting with this before we dive into the technicals, so you can have a hint on what needs to be done. So the second thing is chasing price, and this, we call this the FOMO trap. So price, let's say price moves 30 pips and then you jump in late. You have no structure, you have no plan, you just saw it going up and you decided to enter a trade because you saw it going up and you don't want to miss out on that move. So this is not the trading we are talking about. This is gambling. So if you really want to learn the right way to trade, you need to stick to this YouTube channel. Make sure you subscribe, make sure you comment, and turn down notifications on so you can get notified when we have a live session going on. Now the third thing, we've covered two things why 90% of traders fail. The third thing is, hey guys, you can comment so I can know if there is someone on the chat. Yeah, is the audio clear? So if the audio is not clear, you can let me know. So what mistake do 90% of the traders do that the top 1% traders don't? Moving stop losses. So let's say you place your trade and you have your target set and your risk set. This means you have already executed your trade, but then in the middle of nowhere, when price starts going against you, you shift your SL from where it was supposed to be to maybe another safer place you think price is not gonna reach. So if you place that stop for a reason, moving it is hoping, and the market is not going to care about hope. It's going to take your money. So this means basically if you shift your SL, you're tampering with the edge. Yeah, when we are trying to trade, we trade based off of the past data we backtested. During the backtesting, we do set rules and we need to follow these rules when trading. If you break these rules, you're going to face some setbacks when trading. You're going to blow your money. And we have a quote here saying the market is a device for transferring money from the impatient to the patient. This is a quote from Warren Buffett, and I think you know. Let's go to the next slide. We have slide 3, why psychology coaching is the real edge in this game. The first thing is we read the market structurally. We wait for the market to show its hand before committing or before trading. So the first thing why trading psychology is going to give you an advantage in this game is because you're going to be structured in all the things you're going to do. You're going to be patient, you're going to be focused, and you're going to be disciplined, because this is what psychology coaching teaches us to do. So we protect the downside first. We do treat risk as the first thing in everything. Before trading, you need to redefine your risk. What are the risk parameters? How many pips are you planning to risk? What's the amount of dollars you're going to lose? You're going to cover everything in the backtesting session as well. You will see. So the third thing we have, each trade is a sample, not a statement. So each trade we take is a sample. We do treat it as data. This is the data we collect. So many of you have not dived into journaling. You don't know how to journal your trades, but collecting data is what's gonna give you a step ahead of those other traders. So one loss does not define us. We let probability work across a series of trades. So we'll talk about probability later along as well. The fourth thing, my plan is made when I am calm. Psychology is gonna help us derive plans. It's gonna ease our trading. We're gonna trade with calm because we know what to do. We've studied about it. We know what it takes. And we have something down, the FXAU difference. This is exactly why we teach you our structured mentorship. We do treat psychology as our main thing, risk management. We do apply, we execute. It's not all about talking and talking. We do the actions, and I want us to do this as a team. We reach this 2000 milestone as a team. Of course, it's not that everyone is gonna reach the milestone. It's just the passionate and the hard workers who are going to reach it. So how we read Euro USD, we do use price over predictions. We do use price, like I told you. We are going to go back into the past markets, and we do track those patterns. We derive trades, buys and sells, and we are going to base off of that data to make our predictions. We're not just going to gamble. The first thing we follow when deriving our systems is market structure. Like the market moves up and down. So we map the highs and the lows. We look for the trend, whether it's a bearish trend or a bullish trend, or whether it's a ranging market. Like we don't want to trade a ranging market. So we get the direction before anything else, and this is a non-negotiable. The second thing we look at is the structure shift. So we enter only after a confirmed change of character. This is our entry confirmation, a structure shift. So when you get a structure shift on the lower time frame, maybe M5, then that's a signal for an entry. We do look at liquidity, like guys, liquidity. These are zones where so many people have placed their stop losses, and these are the zones we do look at before entering our trade. So price hunts these orders resting above equal highs or equal lows. There are so many types of liquidity: the session highs, session lows, the swing highs, the swing lows. We will study all about this. If you stay consistent, just make sure you subscribe and stick to this channel. Then the next thing is the imbalance entry. Most of you all know it as FVGs. So we basically use this as liquidity or our points of interest for buys or zones. Then we have a note down here about Q zones. We only trade when institutions trade. So there are zones that are named as Q zones, and these zones, this is where most of the traders are active, the big traders, the big guys, you get. So we have the first Q zone is in London from 3 to 6 a.m. EST. Maybe we'll convert this to EAT time, East African time, because most of my clients are from East Africa. But for the guys who are in this time zone, London starts from 3 a.m. to 6 a.m. and then the New York killer zone starts from 8 to 11. So if you're in the community, I'm going to have to transfer these time zones to EAT, and I'll drop it in the community. Make sure you click the link in the description. Let's go. So anything outside these windows, we're not going to trade. Let's go to the next slide. The challenge. Now this is the trading challenge. We do some simple math. We want to trade from $100 to $2,000 using compounding discipline and not luck. Yeah, I made a mistake when doing the slides, but it's supposed to be between 2% to 5% risk. And maybe we start 1% to 2% when we grow the account to $500, then that's when we can reduce the risk. But for the start, we can use, because 1 to 2, that's like $2, but 5% is $5, which sounds realistic, risking $5. Yeah, so we're going to risk $5 per trade, maximum risk. Then the minimum risk reward should be 1 to 3, but during the back testing we're going to do a 1 to 4. But yeah, on the live markets we're gonna collect a 1 to 3. Yeah. Let's see. The amount of trades we need to reach our mark is 75 trades. 75 trades. Yeah, to reach our $2,000 mark. So phase 1, we're gonna focus on consistency, growing from $100 to $200. We first need to forget the 2,000, because if we focus on the money, we're going to lose out on the goal. We're going to forget on the processes required to make the money if we do focus on the money. So we need to shift our focus from the money to what's gonna get the money. So focusing only on executing the systems correctly, trade by trade, documenting everything and journaling. I'm going to give you guys a template of my journal so you can journal, and the serious people, the serious guys are going to we're going to make a separate group for only serious guys, and this way I'm going to monitor them to see if they're doing things the right way. Then phase 2, we have compounding phase, compounding from 200 to 500. Our risk doubles in a dollar, so we're gonna risk 5%. Maybe when we reach 500 mark, then you can go to 2% risk. So still we're gonna be risking 5% on phase 2. Then phase 3, this is where we at 500, and now this is where we start the real trading. We're gonna be risking between 1 to 2%. 1% of $500, that's like $5. 2% is $10. Yeah, we can risk that and compound. Yep. And for the guys, it will depend. If you're someone who likes it aggressive, you can stick to 5%, 10%, or 20% even. It depends if you're calculative in your risking. And if you someone who likes slow compounding, then you can stick to 1 to 2%. The goal is reaching $2,000. It doesn't matter how you reach, but it's how you compose yourself when losing, so that you can not blow the account. So the bottleneck is never the math. At even 45% win rate with a 1 to 3 risk to reward, compounding 2% risk, using 2%, 100 becomes 2,000 in just 75 trades. So we combined all the wins and the losers, and in 75 trades the system is going to get us to $2,000. So we are going to dive into the backtesting session and we see how the system works. I've been building this system for you guys. Remember, we were trading gold and gold started acting sideways, so we decided to trade EURUSD for the meantime. The non-negotiables we trade by at FXAU at Forex Academy Uganda. These are the non-negotiables. We don't move stop losses, no revenge trades. We do trade only in killer zones, New York killer zones and London killer zones. We do pre-planned targets. Before entering a trade, you need to plan your targets, your loss and your profits. We do journal every trade before entering it and after, the thought processes. Then we have a daily loss limit of 3% of the total account. Then let's say this is $100. Maybe we can stop at $10 daily risk. We'll set that. I'll share a document if you qualify for the trading challenge. To qualify for the challenge, all you need is an EXNNES account funded with $100. Now let's see the trade journal, our accountability system. The trade journal is our accountability system. After every FXReplay session, you screenshot the entry. This is how you should journal. This is not how I'm gonna journal because I have the experience. I can memorize the patterns. But if you're new by and you really wanna journal, backtest very well, you need to screenshot the entry, write the reason why you entered, and grade the execution, but not the outcome, how you executed the trade. Did you enter it the right way or the bad way? So the outcomes, we can start focusing on the outcome after a series of trades, let's say 30 trades, and then that's how you can say that, this is a bad outcome. After 30 trades, I've lost all. You can't tell an outcome, like the outcome of what you have done, just by 2 to 3 trades or 5 trades. You need a large sample size. You don't need to predict the market, you need to respond to it better than everyone else and do that consistently. That's a quote from someone. Then the next slide 7, this is slide 7. Yeah, there are 8 slides, so we have only 1 slide, and then we can jump into the backtesting session. How do we run the FXReplay session? Here I'm going to explain how we run the FXReplay session. So this is the same format for all those episodes I've done. Chart setup, we have a chart setup. We're going to be trading EURUSD from the daily to the M5. We're going to be using H1 for our general price direction, H4 for our general price direction, then H1 for intraday price direction. We mark our ranges, our sessions, like we're only gonna trade killer zones. State your bias before we press buy. So we have to know our bias, if we are bullish or bearish, where is the liquidity sitting. we are going to do this in the backtesting session as well. So kill zone discipline on camera, so you're going to know how setups form, what time actually the killer zone starts, and you're going to the fourth thing, you're going to log every trade live. So after we backtest, later along we will start trading live again. What we have backtested, we're going to apply it live, and also you're going to see how we do backtest live, how we place the trades in the FXReplay, just in case you don't know. Then yep, that's it for slide 7. This is the light slide, and I just wanted to introduce you guys to the FXAU monthly live physical sessions. We will be hosting these sessions, and I'm going to give this to only 50 serious traders. Yep, we're gonna meet in person at the end of every month. So the location will be in Kampala. It's going to be a closed room for only serious traders. You're not going to pay anything. It's just free for learning purposes. So if you're out there and you want to keep on to keep around likely people, people with the same mindset, then you need to hang around, join in the community. You're going to have to get that chance. So the chance is going to be for only serious people, and we only have 50 spots. So you're going to have a chance of meeting me live physically every month. Who is this for? Traders who are done watching and ready to do the work, consistently journaling, active. I will be monitoring you in the community, so I will know who's ready for the meetup. How to secure your spot? You just need to follow us on all our platforms: TikTok, Instagram, Twitter, also on WhatsApp. Aaron, you can pass. Also on WhatsApp. So how to secure your goal? Follow us on X as well, also TikTok. Follow us on TikTok, follow us on YouTube, subscribe on YouTube. So now let's dive into our backtesting session, and let's dive into our backtesting session. Backtesting session here, Buzeo. Okay, it's here. This is our challenge. Yep. Guys, we are leaving for basketball. My friends just came for me. Basketballer. So we have our, we couldn't open, try. So guys, let's dive in. Yeah, let's lock in. We have EURUSD H1 on our, this is right. On our left, on my left, I have EURUSD, and on my right, I have EURUSD 5 minutes. Yeah, 5 minutes. So the first thing we need, I'm going to build a checklist as well. After maybe episode 4, that's when we'll start discussing about. Oh, we have some comments, but I'll have to read them after the live. So we, on my left, I have H1. Let me first remove this. And then also this, I'm trying to remove the grid the grid. Okay, so we're going to follow structure on the H1. Let's first see what H4 is doing. So what we have on the H4 is you have a break to the upside and then a break to the downside. This is choke, not named as choke, but this is to the downside, yeah. But when we go back, we see that EURUSD is bullish on a higher time frame, maybe the daily. So this is just a retracement, maybe deeper into these buy zones for buys. So I'm not having selling bias yet, apart unless when we have another low getting broken like this on the H4, then that's when I'll shift my bias from bulls to sells. So let's go to H1. Now that I'm bullish on the H4, this was just maybe liquidity sweep tapping into deeper buying levels. So what I'm waiting for on the M5 is just a change in trend or in structure. So let's play and see. So London session starts. So this is London session. We have these buyers. At this point we had buyers trying to buy price and they were taken out by these sellers. So these sellers right here are in control, but remember we want to buy. We have buying bias, we want to buy. What we are going to do is wait for a break to the upside. It hasn't broken to the upside, maybe they are still liquidating people. So now here we have liquidity. These guys who have been in here have been liquidated out of the market. We have enough liquidity, enough stop losses. So let's play and see. Still liquidating more people, that's more liquidity, but keep it in mind we want to buy. And now this is where the FVG comes in from. We have this space in between 3 candlesticks on the H1. This is a fair value gap, and normally it is our point of interest. So let's see if we can have our confirmation. So we see price is trying to fail to break this. That's our first sign that price is like trying to go to the upside. Yep. So guys, we have our first setup confirmation. It's New York already. We're going to place our buys. Let's go. Let's place. We are going to risk $5. We have $99.3 on our account. The SL is 26 pips. We're going to use 0.01. That's 2.6 per position. I'll put in 2 positions. I'll have to take profits, but when the account grows, we'll put in maximum 4 positions when the account grows. So let's see how it goes. This is our first trade on the account. New York session, and it's a loss. So losses are part of the game. I don't want you guys to think we are always going to win. That's why I told you guys we should focus on the outcome from a series of trades, not just one trade. So New York session comes in and we have this liquidity sweep. So we had people buying, we were among those people buying, we acted as liquidity, and now the second bunch of buyers may have a win. So if we have another confirmation, we're going to put it in. But it's already late. Let's go to the next day. That's London. So this is London session. Price is still going our way. We are still bullish. On the H1, it's bullish. Now let's zoom in to have a clear picture. I'll mark my highs. This is a break of structure to the upside. We have that line as a break of structure to the upside. Now this is M5. We're just waiting for the session to start, and then we execute buys. So this is where we're going to execute our buys from. When we confirm above this line. Why are we executing buys from here? Because price broke on the H1 and it gave us a signal that price wants to go up. It retraced back. Now when we go to the M5 to read the price action, we can see we had sellers in control here. Price wants to go to the downside, and at some point we had a signal or a change in character that it's going up, and again it closed above this. So anything above this is going to go up. So we have to get a long position here. We protect this low. I'm going to collect 4 hour. So I'm going to place, let me see, this is $1.6. I'm going to place 3 trades. We are risking $1.6. Remember, the account is still down. So we're gonna have 3 take profits now. Let's go. TP1 hit. Now this is a winning trade. So once TP1 hits, we're going to set BE. TP2 hit. Let's go back to H1. See how it's moving. Now all we have to wait for is New York. TP3 close. It was supposed to be 4 hour. Yep, not yet. So let's go to New York. So that's New York. Still we are bullish. We want to buy, but we still have our position in. Now reading the price action, we see that these guys have been liquidated, and we had a buy confirmation above here. So when price goes up and confirms above this zone, I'm going to place in more buys. Okay. I was a bit fast. So that's where we're supposed to enter from. Again, we need to collect 4 hour. This is our second position. The first trade, all TPs have been hit, and currently we are floating $8 in profits. You can see down. Yep, $8. That's the unreleased PNL. This is the released PNL. Unreleased PNL, this is when we're in a trade. So you see the profits running here. This is the account balance, and this is the released PNL. I'm going to answer all your questions after the session. So we are in our second position. We've had a late entry, but we just need to place and execute. That's like 30 pips. That's $3 per trade. I'm going to place 0.01, 2 trades. Two trades, 3 point. I'm going to place 1 trade because it's a big risk. That's like $3.8. Maybe if price retraces back and then we get a sniper entry, that's when we can enter again at that point. But what's the time? It's already 5 p.m. East African time. Yeah, we can still execute up to 6. So we have another position. So now this is the problem of growing small accounts. The SL range is not aligning with our risk management rules. We are having 2 positions of 3.3, and this is the minimum lot size we can use. So that's overnight. We are not watching the markets. Right now we are asleep, so we just skip to London. Still price is ranging around our entry. Let's check the H1. So H1 is still bullish on my opinion. H1 is still bullish, and we do have buyers in control. Maybe when they take us out, that's when we know. And currently we can't enter any trade because we are still in a trade, so just wait for it to get taken out. So our trade gets taken out and it's London. So we're in the next day. It's Tuesday. What we need to do is first look at the H1 to see who is in control. Sellers are in control currently, but this is like a retracement. We can actually check with the H4 for a better picture. H4 is retracing back into this fair value gap, so we are still bullish and we still want to see bullish trades. So let's go back to 1 hour. So 1 hour is currently retracing back into this zone. Yep. So I'm just waiting for bullish price action. Just waiting for bullish price action. So price is still liquidating deeper. We have New York. So New York opens. And we have the same setup we had. So we have buyers taken out, sellers taken out, and then we close above this blue line. That's our confirmation for a buy. So this is our another buy setup. On EURUSD, we're gonna collect 4 hour. What's the risk? It's 1.7. That's like $1.7. We put 3 positions. 0.01, 3 positions. So this is our third trade. So far we had one loss, one win. This is our third trade. It's also a loss, and that was in New York. And remember, each session we are supposed to have one trade, one loss. We don't need to exceed 2 trades in one session. So we need to go to London. So London, now we need to read H1 price action. It's starting creating several lows or several higher lows. Now that's when we start having bearish price action or bearishness. How many pips? The SL range is between 17 pips and 30 pips or 40 pips maximum. Now London session opens, price is bearish, and we want to see sells below this line. The price confirms back down. That's like 26 pips SL. So this trade, we're going to target this low. We're not going to really target much. Gonna put 2 positions, 0.01, risking $2.8 per trade. The reason as to why I'm targeting 2R is because this is a counter trade. So because we have a lot of liquidity sitting in this zone, maybe these guys can get liquidated, but the price action is bullish. So these are 3 trades in a row. Things like this can happen in the market. That's why we do backtest. Yep. So the trade changes back from bearish to bullish. Need to go to the next session, which is New York. Each session we need to place 1 trade. The account is in drawdown of $9. We have a new range to the upside. Now the trend is bullish again on the H1. Like I told you, H1 gives us our direction for the day, and H4, that's the general price direction for the week, and then daily for the month. So right now we want to see buys. So when we read the M5 price action, we see that buyers are in control. We had some sellers who took out these early buyers. That's liquidity. Now we go back and confirm above. So I just want price maybe to retrace down at that point, and then we can execute. These are 40 pips. 40 pips, 0.01, that's $4. So that means we can use just one position if it retraces back down. One position is gonna hit us $4. But the good thing is we can scale in more orders. This is the next day London session. We still have the trade running. Normally we have to close these running trades of the previous session. Need to collect 100%. So London session starts, we are still bullish. So you have these buyers taken out of the market. This is where we're gonna enter from. So it's a simple system. All you have to wait for is the trend, liquidity, and change in character. So I'll put 3 positions in here. Each position has a risk of 1.3, 1.3, but before we place this trade, let me first delete it. You first need to keep in mind that we have sellers at this point, and this is like our resistance. It's an area of resistance. This is an area of resistance, and we do have potential selling bias in that zone. So after seeing that, we see that price failed to break this high, and that's the first sign. That's the first sign that price is trying to retrace to the downside. So there's no reason for us to trade the buys. So you have price break this low, and this is our signal that price is trying to maybe retrace to the downside. Now I'm going to shift my bias from buys to maybe selling when price comes and confirms down here. See, price clears all these guys. it's ranging, failing to break that zone again. So once they break this zone, then I'll know that there is a lot of buying power. Okay, we break through. Sorry guys. So we do break through this zone, and now everything is bullish. This is New York. Sorry. So this is the next session. Next day, everything is bullish. Price retraces back and touches this zone. Session starts. Now we have this liquidity collected. All we have to wait for is a change in character to the upside. So I'll try everything, but what I have to know, yeah, we had more liquidity, and this is our confirmation for buys. I need to get this letter right proper so that I can send everything at a go. Okay, we have that as our target. Okay, talk to Sharpen. The SL is 17 pips, that's $1.7. I'm going to place 3 trades. I have tried. Yeah. That's why I was wanting to go. That's the fourth loss in a row. We take a break. But now we are backtesting, yeah? So backtesting helps us limit these losses. So the next session, we'll be reviewing the entries and trying to refine it into a good system. So I'm not going to delete, we are going to repeat these again to see what mistakes we did while entering the trades. Yeah. So we add in more confluences so that we can build a good system. Yeah. So price broke to the downside, and now it's coming in for this low. So what we want to do in this position is go to the next session, which is New York. So New York price is now super bearish. Let me see if we have any entry. Now price is bearish, and so you get back to me with the letter. All right, goodbye. We go to the next session, nothing yet. London session. Now price is trying to turn bullish again. We read price action. Price is trying to go back up and now creating a low, breaking the high. So let's wait for the session to open. Just wait for the session to open. That's London session. So anything above here is buys, but we've not retraced down deep into this. So this is our first setup confirmation. Price broke up, came back in and went back up to confirm. Like always, we're gonna collect 4R. Three positions. Like you see the risk management, we've been trading for like 1 week so far, 10 trading days, but we've lost only $15. So that's the discipline I want us to build even on a real account. So when the wins start coming on our side, the winning streak is going to find us with capital or enough capital to risk. This is the fifth trade in a row loss. Again, we lost $5, and so far the account is in a drawdown of 20%. Still, it's not bad. On a $100 account, we can still recover it. This is New York session. We made a loss in London. We want to see price retrace back and then go back down because we are bearish. We are not bullish. But once we close above this zone, like I told you guys, anything above here is buys, anything below here is going to be sells. Let me draw it for you. Because we broke up, we broke this and we had these buyers, so anything above here is going to be buys, and anything above here, because we broke this low with a lot of momentum, we're going to be selling. Sells. So let's see how it goes. It's already late. Let's go to the next day. See, price rejected this zone, and this is a scenario. This is our resistance zone. We need to draw it, and now you know that this is a resistance zone. And remember, we had sells here, so in a sell zone, all we have to wait for is for the session to start so we can sell. The session starts. If we have our first sign of selling here, but I want price to retrace back in here. Yep, price retraces back. price retrace back but doesn't give us a confirmation, and it goes back to break this zone to the upside, the resistance zone to the upside, and now we are bullish again. Guys, we have like 9 minutes for the session to end, so I'm going to reserve the rest of the minutes for questions as we try to build our trading system. Now let me take you through the analytics so far. And the reason as to why I started in such a market condition is because this is like the same month last year. The same month last year, we were backtesting EURUSD. So we have a win rate. These are the same conditions we are trading right now. We have a win rate of 28%. Let me see, it's May. We are in May actually. May was not profitable, that was last month, and this is June. We've only had 1, 2, 3, 4, 5, 6 trades, and we had 1 break even, 1 win, 1, 2, 3, 4 losses, 4 losing days. So that's it for the backtesting session today. We know our system is still poor, but the goal is to produce an 80% win rate off of this system, which is what we are going to do. So let me first answer your questions. I'm humbled to be here. Thanks, Amodea. So yes guys, you should go and check out Amodea So's latest video. It's called Zina on his YouTube channel. What system are we backtesting? EURUSD. We are trying to backtest a system. You can go and check from the start of this video to see where we started from. How many pips are you using? I answered that. We use between 10 pips to 40. 3 positions is a good deal. Yes, MRT. I would go for 4 positions, but on a swing. Yeah, the capital is still low. But when the capital grows, then we'll start thinking about adding more positions. This system is the best for swing trades. Yeah, we are trying to swing trade. How do I join? Just click in the link in description. You're going to have to join. I am so lost. Yes, if you're lost, you need to follow our episodes from episode 1. We are on episode 3 currently. We're trying to backtest to create a system that's gonna flip $100 to 2,000. Compounding, it's not gonna happen overnight. It's hard work. Like you see, what we do here is what real traders do behind the scenes. Backtesting, creating systems, things failing, and then trying again. Because this is our second challenge. The first challenge, it was gold, and gold, we used to have problems regarding risk, and that's why we have EURUSD. And EURUSD is so far good, it's going to give us what we want, because you see, we have 10 trades and we haven't blown our account. The risk is aligning with the amount of money we have. So $5 risk, and the target is 2,000. I know we will make it. See you guys. No more questions. The live session has ended.